Well, in the fourth quarter, if you see, oil marketing companies could actually report some inventory gains, as you pointed out. And the reason behind this is that the Brent crude, now that averaged higher at around $98 per barrel compared to $80 per barrel that we had seen in the third quarter. Now, what happens is that there's a direct correlation between inventory gains and crude prices. As and when the crude prices average higher, the oil marketing companies tend to report an inventory gain because they maintain inventory. Now, moving on to the refining business. Now, the Singapore gross refining margin, which is the Asian benchmark for GRM, averaged higher at around $8.1. That is around 14% higher compared to third quarter. Now, because of higher GRMs, the earnings from the refining business of oil marketing companies tend to improve, and thus they will benefit from this higher Singapore gross refining margin. Coming on to the marketing business, now that was a bit weaker in the fourth quarter of financial year 2021. That is the reason behind this is that the retail fuel prices remain unchanged for a very long time despite the rising crude prices. Now, because of that, the oil marketing companies were losing money on selling every liter of petrol and diesel. As you can see, in the fourth quarter, they lost around 1 rupee on selling every liter of petrol and diesel, and that's the reason why the marketing business is expected to be a bit weak. Now, overall, if you see, the earnings could be a mixed bag because of this weaker marketing business. In fact, in the last 5 weeks of the fourth quarter, the gross marketing margin earned was negative for the oil marketing companies. However, the outlook appears to be strong because the fuel demand is rising. Recently, retail fuel prices have been increased by around 8 to 10 rupees, because of which the margins have improved. Along with that, crude prices have also come off from their highs. So the marketing business could be good going forward. And the most important part is the Singapore gross refining margin. Now that has averaged around $16.88 per barrel so far in the first quarter of FY23, as compared to $8.1. That is nearly double of what it was in the last quarter. So our refining business is expected to be good. The marketing business could show a sequential improvement, and the demand is already improving at this moment for the oil marketing companies.